Welcome to the Final Bar. I'm Greg Schnell, the host of the show. This is the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. And we do have a market. It's been wild. I want to cover off FANG today, which was Apple came out with their earnings after the bell. I want to talk about the overall market, the setup for the potential of a tradable low, and go with that. And then we're going to talk about why it's important to scan for new highs right now, which seems odd, but that's what we're going to do. And then crude oil and the problems ahead. So with that, let's get into the charts. Lots to cover off here. So I just want to go grab. The FANG stocks. Let me just quickly do that. I'm going to type in Amazon here, and then I'm going to go get a chart list. And on this chart list, it's here. And what I want to look at is in candle glance view. I want to grab these charts. I'm going to take away my custom style, just put it on 2 months and add an indicator like the PPO, which is my favorite momentum indicator, and go. And now let's just zoom in on some of these charts. And what you see here is Apple was up, 1.54. And in the after hours, when I was looking before we recorded the show, was up about 3.5 or down 3.5 or 4%. So kind of at yesterday's low or whatever. So is that really a big deal? I think what surprises me the most on this is, they did 46, they were expecting 46.5 million units and they sold 45.9 million, 600,000 on 90 days. Seems crazy to me because it's about 1 day sales on 90 days. So it just seems way oversensitive, but I still think if it holds yesterday's low, is that any real problem? Now the PPO here looks like it wants to turn up. Obviously, if we struggle tomorrow, we might not be able to get it. But the big picture on all of these tech charts is they haven't quite given us a PPO buy signal. So maybe they need a few more days consolidation, but we do have the election next week. So I expect that to help as well. Amazon is already up $200 off its low, so that's pretty significant. And if we go look at Facebook, it's already given us a buy signal. Google has turned up here, and I realize this is more than the FANG list, but the point is they're all top performing tech stocks. Here's Netflix, hasn't quite given us the signal, but again, it was at 270 or something like that, and we're almost at 320. It's up $50 already. So these are fast-moving charts, and here's Microsoft, consolidated quite nicely from 117, let's say, to $100. So a 17% pullback, something like that, and it's already halfway back. So these are pretty big moves, but again, no buy signal on the PPO. And here's Intel, and it just keeps working its way higher. So lots going on these charts. I don't want to get too negative on the market here. I think they're all just starting to turn up this kind of slow, gradual decline at the end here. So just be more ready for upside than downside to me. Okay, so here's the NASDAQ 100. And, if we just grab this chart and click on it, this was from the stock charts main page. I'll go back and show you how I got here to the gallery view. But what I want to show you is just if we took our Fibonacci lines and grab them here, we're hitting back around the 200-day moving average. The 50% average is around 71.40. Cancel. So those are not going to, I don't think that's a problem. I think we can get all the way up to the 7,300 level and probably think about the NASDAQ topping out this rally around there, which would be up around the 50-day moving average. So I'll pull back all the way down, and then we'll see what happens up here. It might take a few days to wobble through here, but I actually expect highs after the election. Okay, so here's the weekly version, and you can see we've broken the 40-week moving average for the first time. And when we did that back in 2014 and 15, it was a bigger deal. So I'm more focused on the fact that I'm expecting somewhat of a rally into year end. And then there's institutional managers who are behind the market. And I think they're going to work pretty hard to get caught up, because otherwise they're out of a job if they've underperformed the indexes. So here we are, and we only need to get to 7,100 for the Nasdaq 100 to go back on a PNF buy signal. So again, here you're sitting here and you can't make it to through the prior high. When you go right here, this first X, this is now a new buy signal. So here you were making lower lows and lower highs, and now you start to make a higher high, and that becomes a buy signal on a PNF chart. Right now we're tied for the highs. And again, these are on the big name stocks. So this is an important place to watch right here. But I think any sort of breakout to that 7,100 level, and this should be a pretty buoyant place to get on board. Okay, so let's just go back. And what I want to show you on the member dashboard, how I got here. The big thing I'm looking at is that the NASDAQ today was up 1.75%. The Russell was up over 2. This is very, very bullish behavior from the kind of small cap and tech sector or growth sectors of the market. So I'm thinking we're on day 4 of the rally. We set the low on the 4th day ago. So let's just go back and count that. And when you click on this, it'll bring up a gallery view. I have customized mine. But here is, on Monday, we made our lows. So that's day 1, day 2, day 3, day 4. And on day 4, we're getting this 2% rally. To me, it feels like we're ready to go higher. We may still wobble here, but I'm anticipating after the election that we go higher regardless of the election results. And much like when Trump got in, that was unexpected, the market rallied significantly. So this is one of the areas that I think we've got lots of room to the upside. And when it gets up here, then we'll start to worry about the overall, if there's going to be a big bear market. And I'm more worried about that from a global perspective than I am from U.S. perspective. But the bigger thing here is on the NASDAQ composite, we're nowhere near the prior high, only on the NASDAQ 100. Anyway, just to make that distinction, because I've got a different chart in here now. Okay, so one of the things I want to cover off is what to do in a bull market or a bear market. And what we can do is just go back here and let's grab this free tools. And we're going to go over here to the predefined scans. And in predefined scans is new 52-week highs. And you could either do it market by market, or you can just click on this button over here and you would go and move them all into an existing chart list. I've moved these same names all into a chart list so you can see what we're going to cover off. So let me just go grab them and start working with them one at a time. But here's Keurig, Dr. Pepper. And so while the market is still trying to bounce off the lows and the heavy tech names are trying to make a move, look at this significant breakout here above consolidation. The chart is gapping higher, and now you get a chance for it to gap higher again. It just looks like this thing wants to go higher to me. Renewable energy, this one is just really on fire. Great chart. And, we're just going to take a few minutes and scroll through these. So you get this chart in here. Okay, let's say this looks like a buyout or something, just the way it's gone. So just grab it and hit delete. And here's Verisign. This might have to pull back a little bit more and then try to pick it up back here around support or whatever. I mean, that's a stunning move, $9 to $16. This one here has been trying to break out. It's a great shape chart, right? Moving up since June. And, the chart's a $2 stock, so it's hard to get anybody too excited about that. But here's NeoGenomics, and we're starting to break through this $15 level. And all of a sudden, this thing takes off. There's definitely something going on the technology there. If you get a chance for a pullback, that's probably a great place to grab it. Hopefully, it comes all the way back to support at $15 or $16, and you can pick it up back there. But this volume pile here suggests something's definitely changing on the stock. Nordstrom, there's so many retails in this breaking out to new highs list. So they're expecting one of the best Christmases in 10 years. And the reason for that, or holiday seasons, the reason for that is there's such low unemployment. So with low unemployment, people have cash in their pockets, and that cash in pockets typically flows through to the shopping season. So I'm expecting higher numbers for the retail area of the market. So as we go, here's Genomic Health trying to break out. Aritzia, this is a Canadian retailer breaking out to the upside. Here's Cormark Holdings, new 18-month high. At this point in time, I'm not so interested in the defensive names. Cormark, if I'm right, this is the food distribution Cormark. And, the problem is I'm looking for growthier names to show up here. I don't really want to be buying the defensives breaking out to a new high. I want to find something with a little more move, like this Xilinx chart. So it had a big base here. It's been winding its way above 76. Recently got above 82, and then so 84 day up, and then pulled back that big dip in October, and now it's just breaking out to fresh new highs. This looks so good to me. I think there's a reason that stock is surging. Here's Burlington Stores, and it looks like it wants to take off to the top. Express Scripts, again, nice setup here, and it looks like it wants to run. And this stock can move quite quick. In August, it was 72.50, and 2 months later, it was at $100. So I think there's enough upside pressure on that one. It can take off. This Quinn Street, I have no idea what they do, but look at this nice big sideways consolidation from February. And now all of a sudden, while the market is still well off its highs, this thing is pushing out to new highs with big volume. This is just textbook breakout stuff. And again, we're just using one of the predefined scans, but it's when we're using it. So we're not using it at the top of September. We're using it at the bottom in October or November. And we're trying to find these big pushes. So here's Walmart, or Walgreens, another defensive name. Probably not the one I want, but again, if you want to balance your portfolio, put some growth and put some of these defensive names that are making fresh new highs. This chart just trades too thin for me. There's no real volume here. And so Amoresco, this one, look at the volume starting to come into this stock, breaking through this kind of $15 layer. Really nice. If you get any sort of a pullback, I think you want to try and buy that if the market continues higher. This SecureWorks, I don't really like it. Yeah, the volume's a little light, 100,000 shares a day. I don't like all this overlapping and doesn't really work as well. You want kind of this surging move as you break out to new highs. So I like this Omega Healthcare. This looks like a perfect place to get on board as it's consolidated for 3 months. Okay. Getting on to Huron Consulting, this one's breaking out. Again, we're just going to go through and show you some of the ideas. So here's another defensive name, Hormel Foods. This is really starting to ramp up. But again, this whole chart goes from 29 to 44. That's a 50% move. You want something that's got some torque to it that can move a lot faster than that. Here's Merck, basically been straight up since April. A little bit of wobble in here, but again, looks pretty sharp. I like that. Decker's Outdoor, another retail stock, breaking out to a fresh new high. So it consolidates for a few days. Try and find somewhere in here when these are breaking out, and at least there's a reason. You're heading into a strong retail season, all that kind of stuff. You got some seasonality in your favor. Lancaster Colony, no idea what they do, but that is quite a move. I think I'd wait for this to relax a little bit. It just seems a little stretched. Ross Stores, another retailer, breaking out to new highs. CDW Corp, big pullback in October like everything else, but gapped all the way up. I don't know what would have caused that. Could be a merger, could be anything, but that kind of price action suggests at least go back and do some investigation, see if you want to own it. Hackett Group today breaking out above this $20 level. That looks like just a great time to get on board. What a nice chart, trending up. SCTR was out of favor, continually improving. Now all of a sudden it's starting to surge. That's just a great look. Children's Place, another retail stock, kind of made the new 52-week high list and then pulled back. If you can get a 4-day pullback and then trying to break out back up, that would be a nice place to pick it up. Standard Motor Products breaking through a big 18-month base here. just a great looking chart. World Fuel Services breaking out of a 9-month or, well, it's obviously 52-week highs because it was on the list, but gapped up and pulled back, give it a chance to consolidate and maybe try to find that one. This Be Popular, that's very funny. BPOP is the ticker. 4-month consolidation and trying to break out to new highs. PPO downtrend starting to turn up, move back above zero. You know, that's just a great technical place on a chart. CME Group pushing through September here and pushing to the upside. Gotta like that. Denny's, just a huge spike here. I think you gotta let that consolidate. But again, this scale goes from $11 to $18. That's not the chart we're looking for. I think we're looking for something with more upside. This Grand Canyon Education, it was $70 a year ago, $125. And then you've got this horizontal resistance. Looks like it wants to try and go higher. Coca-Cola, another defensive name. Hawaii Electric, another defensive. Cincinnati Financial, consolidating, a bit choppy here, but there's good volume, 1.5 million per day. So that's nice. Aon Corp, if I'm not mistaken, that's utility, if I'm right. Okay, and then there's a couple of charts in here you just don't want, so we're just going to delete them. National General Holdings Corp breaking out to a fresh new high. Again, big gap, so you got to go check out what those are for. Selective Insurance, again, not the names we're looking for. McDonald's, a retailer, you know, maybe it's the time to get on board with this, but I think, again, it's these moves into defensives tell me that the overall bull market that we were in, as all these defensives are continuing to be bought, even as the market is basing, I think it tells you that we're going to need to be positioned more defensively later on. But right now, you want to try and play this rally and get, you know, some nice big pushes into year end. I didn't really want to get out of that mode. Okay. Blackstone Mortgage Trust, that isn't it. Purpose rate floating income ETFs, these kind of charts. This West Haven Ventures was a gold stock or whatever, kind of gapped up and is pulling back. Intersections, don't know what they do, but that's quite a move. Must be a merger or something kicking it up. Okay, National General Holdings, you can see a horizontal support and resistance layer here right at $28. This looks fabulous. Something getting it going, but again, you know, the chart's been trending up, consolidated for a while, pulled back in October, and big gap up, probably earnings, and then takes off to the upside. Selective Insurance, that one's starting to move. McDonald's, somehow I moved back. Let me go get these other charts, sorry. Pharmaceuticals, oh, this China Jojo drugstore, it's $2 stock, so let's not get too excited, but it was $1.80, and it's really starting to accelerate out of a base. That's typically a great place, and look at the volume come on board this stock. Especially compared to its prior past. Multi-market income, Console Resources, this thing just keeps pushing up. I'm not sure why. Trying to make a big move here, but this is 100% gain on the chart from 11 to 21. That feels better, enough upside potential. This one's got something going on, HLS Therapeutics, but hard to buy it after that kind of move, might need a little bit more time. And just go to the last page, and then I want to quickly cover off the crude oil setup. So, because I keep deleting charts in there. Okay, so now here we go with West Texas. And the point I want to make on this West Texas is if we look at this chart, we're breaking the uptrend line. We're falling below the 50-week. That's not really what I wanted. I'll just go and change this in a second. But here is the 10-week and the 40-week, and you can see we're below the 200-day moving average on crude oil for the first time since last year. So if nothing else, it suggests caution. But what I want to show you on the daily chart, if I can, this is the daily, one more maybe. Yeah, here's the daily. So we're coming up here, and I've been marking this in my commodities countdown if you've seen the videos, but we're we're falling well below this uptrend line. 68 was important, and we're gapping lower here. Big push down. We're breaking the 3 or 4 year uptrend line on momentum. None of this is good. And I had a friend point out, well, the RSI is only at 28. This thing's got to bounce. And I'm like, well, look over here. It can spend months down here in these lousy levels. That's just the way commodities are. So I'm not I'm not expecting the biggest bear market ever, but clearly these charts are broken. And one of the other signs we have of that is that this is my bullish percent index chart. And actually, let me help you first. So crude oil up at the top, bullish percent for the energy sector, XLE, and then XOP, which is the oil exploration and production. XLE has a lot of drillers, refiners, bunch of stuff, and solar and wind and all that, nuclear. Okay, so here's when everything goes below the 50, I think it's important, and you can see back on September, I was marking this with, these are breaking down. Well, and it started to head above. Now it's breaking down again. But look what's happened with our bullish percent index, lower highs, lower highs, lower highs. And so the market tried to gap up. Crude actually went to a new high, but look at what the bullish percent index was telling us. And now it's below 50. So less than half the stocks are on a buy signal. And as a matter of fact, 10% of them are on a buy signal right now. So when it's this badly beaten up, this is not the time to get into the oil business and hope for better things. We have lots of time to wait here. And this XLE, we can see deep dive, came back down, broke through support. So again, while oil went to a new high in early October, the bullish percent index was only at 61% from a high of 87. So over 25% of the stocks had already gone onto a sell signal. So when you're on a buy signal, in that first chart I showed here on CompQ, we'll just go here. When you're on a buy signal, so you're on your way up, even as this pulls back here, you're not on a sell signal until you start to make a lower low. So the O here, it's still a higher low, so that's fine. When this O comes in, so the market surged up and now pulls back, when this low comes in, this is your first sell signal. And so to get back on a buy signal, we have to go back above the prior X. And so if this pulled back a little bit more and then jumped up, as an example, this would get the chart started. But here we are, downtrend, downtrend. And on this particular X right here, this makes a higher X. That's would convert the chart to a buy signal. And the reason I want to spend a little bit of time saying that is because these charts give quite a bit of wiggle room. Once you're on a sell signal, you have to get all the way back above a previous high in order to change it to a buy signal. Okay, so we only have 10% of the stocks. Well, how does that compare if we just drag this back? And what I want to show you is, let's just grab it here and go back to 2013. So here we are, 2014, the market hits its high, it falls below the 50-day moving average, everything does. And we get down into this 4% level or whatever. So you bounce in here, but look at what West Texas Crude is telling you, XLE is telling you, XOP is telling you, all just saying be very, very careful. And then the same thing happens in 2015, 2016. And don't get me wrong, you can get these rallies, which are fine. But the bottom line is, if the whole sector is, if only 5% of them are on a buy signal, it's going to take a while to change the mood in the sector to get going. And XLE didn't quite make a new 52-week low, but it came very close to it. Again, this being January 1st. So with all of these things, I think the bigger issue here is to really watch as the market's developing. I think we have a lot more downside on crude oil. And if I was to go get a couple more charts in here, one of the charts I would go get is my crack chart, which is the ETF for oil refiners. And it was breaking this trend line. And I mentioned here, all I can see is an uptrend until I look at the PPO. It was making its second lower high. And sure enough, bang, this thing slams and took 10 or 15% out of it from the time I did that video in the next couple of weeks. So the oil refiners, the big names, broke their big uptrend, and it was a 3-year uptrend. And here we are So last week was a pullback. So far this week is an inside week. It would have to get above 32 something to make it a reversal. But I think the bigger issue, these big names could hold up okay, but they're not going to be growth at this point. And I think it's more of an area to be aware of for watching and avoiding than getting on board. Okay, in our last couple of minutes here, I just want to cover off, this is frac, and this is unconventional oil and gas. What you see here is a 3-year trend line that's been snapped. And more importantly, a 4-year ceiling that we couldn't get through. And now we're breaking to the downside. To me, in my work, that's very critical. And we didn't quite make a new 52-week low yet on these. But, there is nothing that tells me that this chart wants to go higher yet. In 2017, it wobbled down here for quite a while. And again, when you get below here's the 10-week and the 40-week crossing on this chart, and it was a pretty bearish signal. So we've just had that both at 1607. So it's happening as we speak. But the bottom line is, if this red trend line would really need for it to hold for me, but I don't think that's going to happen. I think the price is already breaking down and momentum looks to me like it wants to go lower. So while there's an opportunity for a bounce here, I think be very, very careful in the whole energy space and that not so much nuclear, because I think those charts might have some potential, but I'm way more worried about the solar and wind because they all got hammered when oil got hammered before. So try and be aware of the issues there. Okay, so FANG, we've got Apple earnings after hours, and again, we missed by 1 day of sales or something, but their average selling price was up. I still think there's lots of room there. And then the overall market, I think it's trying to bounce. I'm expecting higher highs after the election next week. So we'll see if that happens, but that's kind of how I'm trading it. Scanning for new highs, just how simple that is and how important it is to do it while the market is trying to bounce off the lows. And then crude oil and the problems ahead. So hopefully with all of that information, you've got a trading plan for next week. Try and stay in the strong stuff and be careful in the energy sector. So with that, thanks for joining us on today's show. The final bar airs live on Thursdays at 5 p.m. It can also be found on Stock Charts TV schedule at other times during the week. In addition, you can look for it on the Stock Charts YouTube channel. With that, have a great weekend and good trading.
You've got a problem. Your investments aren't growing as fast as you'd like. So you did a smart thing. You opened an online brokerage account and started learning more about the financial markets. But now you have a bunch of new questions, like, which stocks should I buy? When should I buy them? When should I sell them? You tried watching the talking heads on the financial channels, but they just gave you untimely advice that the real pros already knew about. It's all starting to feel a bit too little, too late. But what if there was a way to know, to truly know, what the market was thinking and how it was behaving, even before the pros? What if you could learn where the market was headed while there was still time to profit from that knowledge? With StockCharts.com, you can. Trusted by thousands of online investors, StockCharts.com has the charting tools and analysis resources you need to make smarter investing decisions. Our intuitive web-based tools make it easy to create high-quality financial charts in just a few simple clicks. Save and organize the charts you're watching to make managing your portfolio a breeze. And when it comes time to buy, our unique technical ranking system sifts through the markets and quickly points you to the most promising stocks and funds. You had a problem until you found the solution at StockCharts.com. Start your free 1-month trial today and see what superior financial charting can do for you. StockCharts.com, simply the web's best financial charts.